Welcome back, traders, to ForexMindsHub. Before we jump into today's topic, please remember to hit the like button and subscribe for more valuable content. Please note that this video is for educational purpose only. So we are diving into something super cool called bullish and bearish divergence. It's like a secret weapon for trading smarter. Stick with me as we break it down and figure out how to use it to make winning trades. Okay, so what is divergence? It is when the price of something moves one way, but an indicator like RSI or MACD moves the opposite way. It's kind of like a hint that trend might change in the market. There are different type of divergences, but the focus of this video is only on regular bullish and bearish divergence. So here's an example of a regular bullish divergence. As you can see, price is making lower low here. You can see lower low, lower low. But if you look at RSI indicator, it is making higher highs. So that's where we do see a difference when price is moving one way and the indicator is moving different way. So this is where we do see bullish divergence. So here's the example of a regular bearish divergence. So as you can see, price is making higher high here, higher high, higher high. But if you look at RSI, we're seeing lower highs here as compared to the price. So that is indicating the structure is changing. Price is going to change its direction from bullish to bearish. So that's the example of regular bearish divergence. There are a number of oscillators that can be used like stochastic, MACD, RSI, on balance volume, etc. But my personal favorite is RSI. I use RSI parameter 5 settings. It gives me clear signals. So before we dive into the nitty-gritty details, let's talk about a common mistake. Traders jump into a trade too quickly when they see divergence signal on the indicator and they don't look at any other confirmations, so it often ends up with losses. So how can we avoid falling into this trap? Here are some essential checks to ensure you're using divergence correctly. So first thing is validate support and resistance. Before considering a divergence trade, make sure there's a strong support or resistance area in play. These levels act as crucial confirmation points and can help validate the divergence signal. Secondly, analyze lower time frames. Dive into the structure of the price action on lower time frame to confirm the change in the market sentiment. Look for shifts from bullish to bearish or vice versa, providing additional confirmation for your divergence trade. So example is, let's say you do see divergence on H1 time frame, so you should look into like a 15 minutes just to see if the structure has changed. Or same thing, like if you are on daily time frame, you do see divergence, then check like lower time frame like H4 or H1 to see if the structure is changing. So in addition to these checks, here are a few more insights to enhance your divergence trading strategy. So confirmation signals could be like wait for additional confirmation signal before entering a trade. This could include like a candlestick pattern, trend line break, or any other technical indicator aligning with your divergence signal. Again, remember, always prioritize risk management. Set clear stop loss levels and adhere to proper position sizing to protect your capital. So here's the example of GBP JPY is H1 chart. So as you can see, price is making like lower low here, right? So you can see in this area, we do see it like a candle over here. Okay. Right here we do see RSI at this level close to 15. Now we do see pulled back and again made an other lower low here. But if you look at RSI, so RSI should be further down, but it's not. So it means something is going around here in this area. So that should catch our attention that maybe price is not moving further down, so maybe it will be at some point like it is changing its direction. So now let's look at other confluence that we can add here, right? So first thing is like, let's see if there's a valid support or resistance area. So let's see, like over here we can see like that could be a zone over here, like we can draw a zone rather than like just a line. So even if we draw a line, so we do see like multiple touches here, like price did bounce back, multiple touches in this area. So this is a good area that is offering support. So that's our one check here. So what we'll do next, so we have to look at some other things. So what I would normally do, I draw a trend line. I consider this point and this point. I draw a trend line here. So now I will wait to take the trade until it breaks this trend line. So no rush. So, okay, so like be patient. So wait for the right signal to make sure like this is a valid trade. So what I will do, I will switch to lower time frame like M15 here, and I will highlight this area on H1 just to make sure that we are looking at the right uh, chart, right candles right here. So let me switch over to M15. So as you can see, like this is M15 chart. So price was making like a lower low here, and now like we're waiting for structure change. So we're waiting for it to break this high point. So it made a higher high, and from here it made a lower low. So at after this point, like I do see it did break the trend line here, and now again it's retesting this area. So I can enter safely over here after closing of this candle. And some traders are comfortable in taking set their stop loss at the low of this structure. Maybe they take a stop loss over here like a 38 or 40 pips. Some may want to do it further down at this structure that was like a major structure, so maybe like below this area. So let's say like that's a 60 pip, and take profit to whatever, like if to either like 1.5 2x, or look at any other high area, other like a higher support resistance area, and target that. So this way like I can take this trade comfortably because I have like a multiple confluence. First we looked at support resistance area, then we did draw the trend line over here. We were waiting for it to break this trend line, and again most importantly we looked at the lower time frame when it changed this structure. So when it changed to bullish structure, so at that point like we should be taking this entry. So I'm comfortable in taking my proper risk, like 1%, 1.5%, whatever the amount of money, like a risk I want to take. So I can take that risk and let the trade ride. So in this way, let it hit the take profit, and you can manage it however you like. So this is the example of bullish divergence. So here's the example of a bearish divergence. So again, we are on H1 GJ. So if you look at like a price, what is price doing here? So price is going up, up right here. Look at the RSI level. RSI level is here, and when price is moving up, making higher highs at this level, if we look at RSI level is over here. It's down, even though like price moved up, or RSI is coming down. So that tells us like something is up. So maybe it is a possibility of changing in the price structure, or like it's not going to have like a continued buy trend, is changing into selling. So we can look at like a further checks to make sure like if this is the right time to sell or not. So first thing, so this is just a trend line, just to look at like if it is really like moving, price is moving up, so it's in this direction, and RSI is coming down, so it is in this direction. So this is like a clear like a bearish divergence indication. So now we are going to add our extra confirmation before we enter a trade. So first thing is like make sure to like if it's a valid like a support or resistance area. So we do see it like a this zone like a price was constantly like for last couple of hours over there, like price stayed over here in this zone, so it was providing good resistance. So first check passed. So then what we will do, I will draw a trend line here. So I could just simply draw a trend line here, and I want to make sure that price comes down and break this trend line before I enter this trade. And third thing is I will switch to 15 minutes chart, and again for another confirmation if the structure is changing. So now I switched to M15 minutes chart. So you can see price was still like making higher highs, and from this point we'll see like if it start going to make lower lows, so it break the low over here at this point. So structure has changed, as we can already see it, so we can safely take position at this point. So look at the candle structure and everything. So everything is pointing to selling, strong selling. So what I can do is I can simply take position at this point. Stop loss could be over here at 70 pips, and I can target next area like support resistance area 1.5x 2x or however you like, or like target at least like this area where the price was moving down, and that would be a winning trade. So we covered both examples, one for bullish divergence and one for bearish divergence. So in conclusion, mastering bullish and bearish divergence requires patience, diligence, and a thorough understanding of market dynamics. By following the essential checks outlined in this video and incorporating additional insights into your trading strategy, you can take advantage of the power of divergence to identify high probability trading opportunities and achieve consistent profitability. Thank you for tuning in. If you found this video helpful, don't forget to hit the like button and subscribe for more valuable content. And as always, happy trading.